Hello, everyone. Welcome to today's Baker Tilly webinar. Today, we'll be speaking on trends in spend transparency reporting and analytics for life sciences companies. Now, I know that's a bit of a broad topic, and I also know that spend transparency reporting has been around for quite some time now. But like any good thing, it continues to evolve, right? It continues to evolve either through new reporting requirements, new jurisdictions entering the mix, like we recently had with Italy. But then also some evolving tangential enforcement guidelines by groups like the Department of Justice and the OIG and other global enforcement agencies, kind of requires us very often to kind of take a look at our spend and our spend, the transparency that's out there, the optics and the perception that's out there, because this is a lot of very public information about our organizations, right? So it makes sense to continue to speak about these things and talk about these trends in general sense, but also in some very specific sense as well. Because like the continued evolving guidelines that we're seeing from DOJ and OIG, there are some things that we can do to increase our optics, to increase our analysis, data analytics, and other things that can help us grow as an organization, continue to help the compliance professionals, many of whom are joining us today, partner with the business and come up with, while still maintaining a very robust compliance program. Because new tools out in the marketplace also continues to evolve. And it allows us to really, again, have more optics into who are we engaging with, who's the rest of the industry engaging with, and how can we identify maybe any untapped talent that's out there or untapped perspective or points of view that's out there that we can partner with, and again, continue our success as an organization while maintaining compliance. So that's sort of what we want to talk about. I'll get into a little bit more specifics in a second. But before we go there, I'd like to start with some introductions. So I can begin. I'm Mark Scallon. I'm a principal with Baker Tilly and its life sciences advisory practice. I lead the compliance and ethics market offerings for the life sciences industry at the firm. I've been doing this for almost 25 years now, really working with pharma, biotech, med device, diagnostic, and digital health companies, really to identify their compliance-related risk in their organization and put some solutions in place to address that risk with transparency-related matters just being one of those things that I work with the industry. So that's my background. I'll turn it over to Mario, my colleague here at Baker Tilly, to introduce himself.
Thank you, Mark, for the introduction, and hello to everyone. It's a pleasure to be with you for this webinar. Mario Prohaski, I'm a director with our life sciences advisory practice here at Baker Tilly with 12, 13 years of experience globally in building and managing compliance and risk management programs for the life sciences industry. With a particular focus on the US and North American markets, but also the EMEA and APAC regions as well. And in that context, I've dealt extensively with the topic of transparency, again, from a fairly global perspective. Looking forward to our discussion and sharing some of our best practices and some of the key analytical components or viewpoints that Mark mentioned during today's webinar. With that, I also will pass it to Christopher Gringers for an introduction as well.
Thanks, Mario. Good afternoon. It's great to be here on today's webinar. Chris Gingras, founder of MedComply. I've done compliance and ethics work for over 20 years. I was a compliance officer for a large healthcare system, compliance officer for a global medical device company, worked at a Big Four accounting firm. So I've done this for quite a long time and looking forward to sharing some insights into transparency reporting and best practices.
Great. Thank you, Mario, and thanks, Chris. So talking about taking a look at our learning objectives for this session, we want to kind of take a step back and look at any lessons learned from the 2022-2023 reporting period. And we'll speak a little bit about that, the focus on accuracy, completeness, and timeliness associated with that. We also want to talk about some evolving best practices that have come out of that reporting year. And then lastly, talk about that focus on analytics that I was alluding to during my opening sort of comments, right? And that's around our ability to harness the data to be more compliant and have more effective HCP engagement so that we can also address some of the evolving enforcement actions and scrutiny that the industry is under. At the end of that, if we have time, we plan on leaving time at the end to then answer any questions that you have. Feel free, as the for the opening directions said, to submit questions throughout. We will try our best to answer them live. If not, we will try to save them to the end. Although you can submit your question anonymously, it may be best to maybe not do it anonymously, just because if we don't have time to address your questions, we can then reach out to you directly to respond to your question if we know what your name is. So that's our only ask there, and my only housekeeping thing. So we're going to move on now with some of the content. Actually, no, we're not. We're going to start off with the polling questions. So we have 4 polling questions during this webinar. And the first one, if you can respond, is which area of transparency reporting is your organization encountering the biggest challenges or difficulties? It could be either A, data capture, whether that be direct data or indirect data from any third parties. Data accuracy and quality is B. C, operational constraints, such as resourcing, reliance on manual labor-intensive processes, etc. D is effectiveness of technology solutions or the need to implement one because you have reached the threshold of transactions to handle it manually. E, transparency data analytics for compliance, or F, not applicable. If you could answer, we have, I believe there's about 30 seconds till the results come up, and then I can share those with you. I think it is also going to flash up on the screen here. I know a lot of these sort of areas of transparency reporting kind of depends on the sort of stage of maturity your organization is in. Those that are kind of emerging and maybe having to do this for the first time tend to have data capture be their biggest issue, right? What are the source systems? How do I get all that information out of the source systems? What are the requirements? It's things like that. And then those that are more sort of mature on the spectrum, it's around that whole data analytic for compliance aspect of it. So responses have come in, and it seems to be a bit scattered. So 20% is A, around data capture. 24% is B, around data accuracy and quality. Excuse me. 24% is C, operational constraints. 7% is D, around effectiveness of their technology or need for one. And then 8% is transparency data analytics for compliance, with 17% being non-applicable. So thank you for that. Moving on to the next slide, I'm going to turn it over to Mario, where he's going to talk about some challenges around the accuracy, completeness, and timely reporting of spend transparency. Go ahead, Mario.
Thank you, Mark. And actually, I think what we're going to cover from challenges and associated best practice perspective, I think aligns nicely with some of the polling results that we just saw, right? So this idea of kind of companies still being challenged by issues around data capture, both of indirect and direct data, data accuracy. We also see that very much being a big focus for our clients as well. And that's despite the fact that transparency, as Mark mentioned, has been around for a long time. But I think there's an element of a constantly evolving target in terms of transparency, best practice, and the evolving set of regulations, which also means that some of these questions around continuously focusing on accuracy, continuously focusing on completeness of the data, and on timeliness of reporting are, I think, still pertinent even now 10, 12 years into the existence of transparency reporting regulations globally. So, I think what we wanted to highlight here is that you're probably not alone, right, in terms of some of the challenges that you're experiencing as seen in the poll, and that's certainly something that we are also observing with our client base. What is important to notice, and when we talk about accuracy, and the question here is how do we continue to comply with spend transparency regulations globally as they continue to evolve and change. Timing, again, really treating transparency as an overall program where the reporting deadlines are obviously well known, but we need to plan well ahead in advance with the business in order to make sure that we address them. And then in addition to that, of course, lots of questions around establishing and maintaining reporting methodologies that are both compliant, but also ensure accuracy and completeness of the reporting as well. We also do see kind of the sort of question of how do we transition effectively from a manual to an automated solution being a key one as well, and what are some of the key triggers for that, right? And as an important component of what companies are still challenged by. And then lastly, how do we stay ahead of the game? So anticipating future developments. Mark noted the emergence of new legislation in Italy. I think that's just one of many examples in the last few months, in the last couple of years, of new regulations coming in, and really the challenge around how to make sure that we stay on top of that, and also staying on top of that, not only in terms of understanding what the requirements are, but also understanding how they apply to us as individual organizations. So we'll touch on a lot of these challenges kind of as we go through our presentation today, and hopefully provide some more perspective on how companies are dealing with them. But it does seem like kind of some of the key results of the poll also align with the question that's the challenges that we pose here in terms of accuracy of the data, completeness of the data, and also ensuring that we report in a timely and effective manner. Can you move to the next slide, please? Now, what does that mean in terms of how best practice is evolving, and maybe some of the lessons that we've learned in working with our clients in the last reporting cycle in terms of evolving best practice as it pertains to some of the challenges that we've seen. So starting with the question of kind of how do we continue to comply with the transparency regulations and ensure that we report accurately and completely in terms of what's required, there's kind of both an internal and external element to that from our perspective. So I think internally, what we are seeing is compliance programs and compliance professionals continuing to focus on making sure that compliance is well represented in the business decision-making room, so to say, so that we ensure that we know exactly what the business is planning on doing and how that may have an impact in terms of our reporting obligations going forward. And that remains a challenge still, right? When we're still working in this sort of very much hybrid mode of operating, where it is difficult to stay connected and to really be a connected business partner in general for our compliance professionals. And that specifically also applies in terms of being able to foresee how business planning and potential activities may impact our reporting requirements and needs going forward. So in addition to that internal sort of area of focus and evolving best practice there, I think externally, we also are seeing a continuous focus on maintaining a robust knowledge of global compliance regulations, and really doing that in a more aggregated manner, where we're not treating transparency as a standalone topic, but that's really combined with maintaining a comprehensive set of requirements that pertain to HCP engagement in general. So both your pre-engagement requirements or fair market value, tiering, meals, caps and limits, as well as obviously your transparency disclosure requirements. I think that creates a certain level of kind of operational efficiency for our compliance clients that helps us to really stay ahead of the curve in terms of maintaining a global knowledge and ensure that we continue to report accurately and completely in terms of our requirements. From a timing perspective, I will note we are continuing to see a drive for companies to really treat transparency reporting as an ongoing program, whereby we're really using the reporting deadline as goalposts for our program, but we are throughout the year seeing clients very focused on continuous data collection, data capture, in order to make sure that when the reporting period does come, we're not overwhelmed by the work that needs to be done. I think that does require, both good continuous partnership with the business, but also ensuring that companies have the operational capacity to handle this on an ongoing basis from a resourcing standpoint as well. There's a couple of other points here on best practice related to ensuring accurate methodologies and obviously kind of anticipating future developments in terms of resources that are available for that. But I also wanted to pause here to see maybe if Chris and Mark wanted to add any perspective from the experience of their clients and some of the best practices that they may be seeing at this point.
Yeah, just a few thoughts, Mario. One is that sort of like a compliance program, as sort of Mark mentioned and you mentioned, Mario, that transparency has been around for a long time, and you want to look at your program and refresh the transparency initiatives. I think it's been around a long time. People are tired of it, but how do you refresh and keep it alive so that individuals are paying attention to it? So that might be new training. How do you make it interesting again? I don't know how you make, there's different things that you could do to make transparency interesting. But I think it's been around so long that you have to refresh the transparency program. The other thing as well is from a business perspective, I think it's great to get the business to sign off on the transparency reports. So sort of like what you do with like SOX or financial statements, you want to get the business to sign off on the reporting. So that's a great way to kind of help ensure accuracy because you're holding them accountable, and you may also identify some additional spend that's out there. I think from an accuracy perspective, like using analytics to identify any anomalies can really help, because I'm still seeing now that there's lots of accuracy issues like nature of payments, amounts, dates. Like you can use analytics to help identify some of these, and it's much better to identify those ahead of time so that you don't have to correct them with disputes. Like, why do we have a massage therapist? Why do we have a meal for $1,000? Or there's all of these things that you could be doing to identify transactions that are erroneous before they get reported. And then I think the other thing as well is just like, don't overcomplicate things. I see a lot of clients still do that. Like MedComply is a transparency platform, but it's not needed for every company. Like if you only have 100, 200 transactions, and you don't need a Lamborghini or a fancy platform, right? Like you might be okay with like a pickup truck or something like that. So don't overcomplicate it. Or, we'll see clients that like, they have like this like Excel formula to calculate like the amount for like a loan of a device. Like don't overcomplicate it. Like come up with a real simple calculation, and that's going to improve your accuracy. You shouldn't need like a Black-Scholes model to figure out like your transparency, transaction or something like that. So, so those are just some high-level thoughts. Like just kind of keep it simple. Make sure you have accurate data. Like refresh your program, and get the business to buy in. So, anyways, those are just some kind of high-level thoughts related to like some of the challenges that are out there.
Thank you for sharing this perspective, and I think that's particularly the point that you made about it. I think using analytics as a way to increase your accuracy and to validate the quality of our reporting is an important one, because we do have more and more tools that are available, and as we'll see, the data is there. It is a matter of making sure that we use it in a way that enhances our compliance, enhances our transparency program, and also helps the business, and that makes us better business partners as well.
So moving on to the next slide is actually another polling question. So real quick, if you can answer this question up on the screen now, what is one improvement you're looking to implement in your transparency program going into this new year? A, improve quality of source data, particularly coming from the finance systems or Concur or what other expense management system you may have. Enhance cross-functional collaboration to ensure accurate and timely reporting. C, eliminate inefficiencies in current data capture or data validation processes. D, focus on process automation and analytics, or E, not applicable. Okay, just waiting a couple more minutes. I know I'm working with a lot of my clients. Usually B tends to be one of the things you're looking to improve on the most around cross-functional collaboration. A lot of times that comes out of, after you report that you identify any missed spend and you realize that was due to a lack of effective cross-functional collaboration. So kind of going back to improve that to, again, address the completeness challenge that's out there.
I think particularly in the context of global reporting, that becomes even more relevant.
Yep. Yeah, so results are in. 17% had A, 26% had B, 24% had C, and 22% had D. So kind of an 11 not applicable. So sort of somewhat of an even distribution there, although the highest number being that B that I had mentioned earlier, but around cross-functional collaboration, so that makes sense. Okay, great. Thank you for that. Moving on to the next slide, Chris, I think you're going to talk about extracting tangible value from transparency reporting.
Yeah, thanks, Mark. So there's a lot of value that can be gained from reviewing the data that is internal as well as the data that is external. So you can use the internal data that you have to conduct auditing and monitoring activities. So this is where you can build dashboards to look at things like, meal limits, number of transactions. You can look at, you can look at the transactions by, region. So I think one significant use case for the data is to improve your auditing and monitoring program, and all of that can be done, using, data reporting systems like, Power BI or some of the other tools that are out there. So I think that's kind of one value is sort of the auditing and monitoring. The other sort of value is more from a business perspective, but you can use the data internally and external to identify new market opportunities, the average amounts that you're spending on like speaker programs. So you can use the data to, and then Mark will talk about this in a little bit, but what is sort of the return on the investment that you're making for these speaker programs, and you want to do that in a compliant way. But how many programs are you doing? Is there follow-up engagement from the doctor after these programs? So you can use this from a commercial perspective, and you can use it from an auditing and monitoring perspective. And then you can also use this from sort of general compliance risk management to identify risk areas. You can look at the data to identify like spouses or nurses or specialties that you shouldn't be engaging with. And then this can also feed into your general compliance program from FMB and KOL profiling perspectives. So do you have any other thoughts, Mario, on like extracting sort of value from the transparency data?
Yeah, I think that I mean, I'll just pick up on the last point that you made around kind of connecting with other HCP engagement data sources like your fair market value or KOL profiling data. We actually do have a couple of use cases related to that we'll share shortly. But to me, that is actually particularly important because it really gives you a much more holistic understanding of the whole engagement life cycle, both at the individual KOL level, but potentially also at the aggregate level. And I think that provides really great insights that will allow us to mitigate compliance risk, particularly in the context of some of the kind of recent enforcement actions and statements by the OIG, but also provides kind of tangible commercial value in terms of being able to identify entire sets or subsets of KOLs that maybe are appropriate for us to engage with, that will help us with our scientific objectives, or individual KOLs, right, in a much more specific manner, right? So I think that kind of linkage between HCP engagement or pre-engagement data, your FMV, your tiering, your KOL profiles, and reporting data can be actually a very powerful tool in our analytical toolkit. I will say also, I mean, we're talking about data analytics use cases, and we'll see some of that shortly. Obviously, there's going to be some country variances, right? So what we can do with the data in the US is going to be a little bit different from what we can do in other markets. And certainly happy to get into that discussion as well if there's any questions on that. But our ability to use the data, particularly in Europe, may be a little more constrained in some respects due to the quality of the reportable data, and obviously a number of important privacy considerations in terms of leveraging that. So all that to say, there's a lot of great use cases and tangible value that can be either commercial or compliance oriented in nature, but that will depend obviously a little bit on the jurisdiction in which we're operating and some of the constraints that exist around that.
And related to that, Mario, we actually do have a question that just came in that is the answer of which is, I think, related to the variability from jurisdiction to jurisdiction, right? So one question that did just come in is, can you clarify which type of payments are in scope of transparency reporting obligations? For example, honoraria, meals, travel, etc. I mean, my initial response, and you can elaborate, Mario and Chris, is it depends. It depends on the jurisdiction, right? There are some countries that the reporting requirements includes any and all things, namely US and France. And then there are some other countries where maybe it's just meals. Or in the case of travel, right, it better not be in Italy because by law in Italy, you're not allowed to compensate HCPs for travel expenses. So it depends. I'm going to go ahead, though, and assume that your question is mainly related to US open payments. And in that regard, Mario and Chris, if you want to maybe respond as to the types of payments that are in scope for transparency reporting. I know it's a long list. We don't really have time to go through that whole list. And we can follow up with the person who asked that question with maybe a list of those things that are covered according to the open requirements. But if you want to maybe just answer generally, that would be great.
Yeah, I think it's going to be consulting, royalties, honoraria, payments to doctors for services, and then also payments to doctors. And it doesn't have to be a doctor. It could be a PA. It could be an NP. And it could also be like food and beverage. So the number of transactions, the greatest number of transactions is going to be food and beverage. So taking a covered recipient out to lunch or dinner or at a program, and then payment for services. And then there's other categories that could be reportable as well. Things like device loans or ownership is also reportable, research payments to a teaching hospital or to a principal investigator. So there's quite a broad list of payments, but almost any transfer of value made to a covered recipient, which is like a PA, NP, MD, DO, dental, DDS, would be covered. So it's a pretty broad list. As Mark mentioned, in other markets, like grants would be reportable, but not any other transfers. But I kind of hope that helps answer the question.
Yeah, and if that question was submitted unanonymously, that's a word, we'll be sure to respond to you with a full list of those things of the types of transactions that are included particularly for open payments in the US. Okay, so I just want to make sure. What's that?
Yeah, just one last comment, Mark, on the commercial perspective. When you're looking at the data as well, like if let's say your company's strategic imperative or initiative is in a certain therapeutic area, if 90% of your meal spend is in a different therapeutic area, like why is that? So those are the kinds of things that you can start to look at. Like, do your transfers of value match your strategic objectives as an organization? And if they don't, like why? And then I think that's good information for companies to look at. And then from an auditing perspective, looking at like, do you actually have contracts for these payments? Like that's a simple audit to do. Like if you have a consulting payment, hopefully you have a contract. Like you can do that real quickly. And if you don't, you have a control weakness that or something happened. So those are my last thoughts, Mark.
Yep, great. All right, moving on. I want to make sure we have enough time to get to the case studies. But first, we have to get through the third polling question, which is in what manner are you utilizing your transparency data for analytics? So, so if you are doing analytics, right, are you mainly using them for just general compliance risk management in A, for monitoring and auditing only, which if you know the revised OIG guidelines states that they now expect companies to use data analytics specifically for their auditing and monitoring functions. C, commercial decision making. D, all the above, or E, you're not conducting any analytics at this time. You know, with some of the clients that we work with on the data analytic front, right, it's usually starts off with sort of that auditing and monitoring only, primarily to address the DOJ's revised guidelines. But then from there, it's sort of, and as you go ahead and develop your key risk indicators and all that, it tends to expand. And then once you start seeing the power of the data analytics associated with the transparency data, then the business wants in on it too, right? They're like, oh, I would like to see some additional analytics around there. Understanding compliance that sort of can't be involved with any ROI type discussions associated with that, but the power of it is pretty amazing. Okay, responses are in, and 17% A, 18% B, 4% C, 40% all the above, that's great, and then 21% E. Okay, great, thanks again for responding to the polling questions. Getting into the next section here, we want to talk a little bit about sort of the HCP engagement enforcement considerations. So as I had mentioned at the very beginning, right, there are some tangential regulatory enforcement things that is requiring us to kind of take an opportunity to look at the data that's out there and see how we can address what the regulators are looking at through the use of data and tools that are available to us. So what do I mean by that? So a lot of the sort of regulatory environment that we find ourselves in is requiring us to sort of change the way we're doing business. As an example, some of the drivers of that change, right? One is recent settlements. So taking a look at two of the rather large settlements over the last few years with the Novartis and Biogen settlements, those were directly related to HCP engagement enforcement. So how are those companies engaging with HCPs? The second is around the DOJ's revised guidelines of an effective compliance program, where they mentioned some very specific things that they're expecting to see when they and not see when they're looking at a compliance program and certain things at the organization and how they are engaging with HCPs. The third is the OIG fraud alert, which was very specific to how companies are engaging, particularly around speaker programs and other events with HCPs. And lastly, conference panels. So when you go to a lot of the compliance conferences are out there, there's always a DOJ panel, right? And they're all starting to say the same thing that we're seeing in the settlements, the DOJ's revised guidelines, and the OIG fraud alert. And it's all been a very consistent theme around what they're saying in all of these sort of four sources, right? And that is they are not, especially with spend transparency, they're not looking to see if you're being compliant with getting your reports in, or that you're getting your reports complete and accurate and timely. What they're really looking for is how are you spending your money? Who are you engaging with? What are you paying them? How are you paying them? And how many of them are you paying them on a recurring basis, right? So if you look at the recent settlements, a lot of that was related to the alleged conduct of you're engaging with the same KOLs over and over again. You are paying them over and over again for the same information, either to attend a program, or to speak on behalf of the organization. And they are using the data, particularly the transparency data, to run their own data analytics on that, to identify trends around repeated payments for services to the same key opinion leaders, right? It's been consistent, and on the conference panels, that's usually the first thing they say when the question in that conference panel is, what are the things that you're looking at in the life sciences industry right now? Boom, it's always the first thing they say. We're looking to see if companies are engaging and paying KOLs or having a transfers of value to KOLs, the same KOLs for the same information. So what is the current state in some organizations that we see, right, in the work that we do advising our clients? One is continued use of the same KOLs to serve on advisory boards as speakers and consultants or as attendees at those events. Continued payments to HCPs and KOLs based on a non-robust or non-defensible FMV methodology, so paying them too much, right? And then there's no optics into the full set of KOLs that are available to the business. So in other words, it's just limited to the existing relationships that those in either sales and marketing or the medical affairs functions have with the medical community. That current state, combined with what the drivers of change are from the regulators, is sort of a recipe for what we would see as an increase in investigations related to this, right? So what are some of the things that we can do, or some considerations for sort of addressing that and protecting the organization? And what does that mean for spend transparency, since this is a spend transparency related webinar, right? Some of the things is that we need to reinforce and continue our focus on sort of the core HCP engagement controls of FMV and tiering and background screening and things like that, right? That still needs to be a key component of our mature compliance programs. Second and the third, though, are sort of a little bit new, and that's increasing the use of analytical tools, right, such as transparency data, so that we can take a look and see are there any outliers in the data. Is our levels of a promotional engagement with KOLs appropriate? In other words, how often or how many times are we engaging with the same KOL that can come out of this transparency data? And then the third is there are other tools available, right, such as KOL identification tools that the industry may not be using as much, particularly the compliance function may not be using as much. But there are a number of KOLs out there that have those similar skill sets and qualifications as the HCPs and KOLs that you are currently engaging with, that are out there that companies should be identifying and bringing into the mix. One, because they could be offering a new point of view and to the whole HCP partnership function and medical affairs, but also addresses these key drivers of change by the regulators around mixing it up, right, with the set of HCPs and KOLs with whom you engage. So that whole sort of idea is really where we can tap into, and if you want to go to the next slide, we can tap into 3 sources of data to really ensure that we're having a holistic view of HCP engagement. If you can advance to the next slide. Those 3 main data points, right, as I just walked through, FMV data, along with the KOL identification data, along with the transparency data, will allow us to take that holistic view of how we're engaging with HCPs and kind of diagnose ourselves as, okay, we look pretty good. We have a lot of diversity in who it is we're engaging with. It's constantly evolving and changing. Or we take a look and say, wow, we've been engaging with just the same KOLs for years. It's the same KOLs that everyone else is engaging with. this is the exact thing that Department of Justice may be looking at, and we may need to change some things. So with that, I'd like to move forward sort of with a case study that Mario is going to walk you through that kind of expresses this whole idea and how we can use this data to tell us more about our organization and how we're engaged with HCPs and identify whether or not we need to make any changes. So go ahead, Mario.
Thank you, Mark. And yeah, maybe you can move to the next slide. So the case study that we wanted to discuss with everyone today is it really centers around the approach to enhance compliance, but also provide benefit to the business in terms of how we identify and work with KOLs. So we have two companies here, Company 1 and Company 2. And what we would like to do is really kind of analyze the data from a transparency reporting standpoint in order to determine, are there certain KOLs perhaps that are being engaged by both companies or only by one of the two companies? And what insights could that give us, right? So this is, that could really give us a lot of insights as to, maybe untapped KOLs that we could work with, presumably with equally strong scientific expertise. If they're not engaged by Company 1, but they actually are engaged by Company 2. Or on the flip side, we could also look at other scenarios where we can look at perhaps KOLs that are engaged by both organizations and maybe by other companies in the industry, which will, I think, give us perhaps some insights as to the potential level of utilization of those KOLs, and maybe even overutilization of those KOLs, which may have, again, both business but also compliance repercussions. So taking the spend data and really slicing that to determine the variances between who we're engaging with and who competitors are engaging with, where there's overlap and where there isn't, and trying to understand maybe some of the key drivers for that, I think is an important potential use case of the data. And then we can, of course, match that to the KOL identification data that we may have as well to see what the trends are. So are there, in this case, is it, perhaps a different tiering distribution that one company is engaging versus another, or are there perhaps some other factors that we could look into? So this analytical process, again, will give us, again, both compliance insights as well as potentially kind of market value from a business perspective as well. And in the next couple of slides, we'll walk you through kind of how we would approach essentially kind of working through that particular case as well, using some of the data that's actually available, right? So if we move to the next slide, we'll see that we have here, again, a sample recipient comparison coming out of the transparency reporting data. So fairly simple kind of list of KOLs that are engaged either by both companies, in this case, or Company 1 and 2, or only by one or the other. And that level of data is, of course, easily obtainable from the transparency reporting data, and there are a number of kind of dashboard solutions that can be used in order to arrive at that recipient comparison. You can slice that and further, of course, and look at maybe only top 5 or top 10 HCPs that fall in each category. Of course, differentiate geographically, etc. But the whole idea is that we can take the transparency data and really identify where we have overlap between us as an organization, maybe another company, or the market in general, and where maybe there are some variances in terms of KOLs that are engaged or not engaged by us as an organization. So that's step one. And I think what we can do is further enhance analysis with a couple of subsequent steps, and maybe we can move to the next slide. So we can take essentially the list of those recipients and the variances that we've observed in the transparency reporting data, and then really do some more additional analysis of those individual KOLs in order to determine kind of some more relevant trends. So for the individuals that we are not engaging with, but maybe competitors are, we have the ability through, for example, our KOL Now tool to then go into their profiles, really understand their scientific background, understand their level of experience and expertise, in order to determine maybe these are people who would add value to us as an organization from a scientific perspective, and also will help us to mitigate compliance risk, because by using them or by engaging with them, we can mitigate the potential overuse of other KOLs that we already have on our roster. And here's just a number of there's a view of how that data can be sliced, right? So in terms of kind of reviewing the KOL identification information. And then on the next slide, we'll see kind of a sample output, right? Where if we can move to the next slide, please. We'll see essentially here's a sample output of a particular view of that KOL identification data based on specialty, based on tier, geography, etc. And that could really supplement the starting point, which was the Transparency Analytics data that we reviewed a couple of slides before that. So again, this could be, in this particular case example, we have the ability to take transparency reporting data, enhance it with KOL identification data, and then arrive at either opportunities for expansion and from a business perspective and new KOLs that we can engage with, or equally importantly, continue to mitigate our compliance risk by diversifying our overall spread of HCPs that we engage with, perhaps identifying some rising stars, and also maybe potentially identifying KOLs that may be overused across the industry, by looking at the overlap that we may have with other companies as well.
Yeah, and Mario, on a very related question just came in specific to this, and that is, how are you able to determine the tier of HCPs that we are not currently engaging from the transparency data alone? And I think you just pulling up this slide kind of answers that question, right? There are tools out there, in particular, what Mario is showing right now is our tool, which is called KOL Now, which is part of our overall Compliance Now platform, where we have pre-tiered over 8 million global key opinion leaders, so that, you know, in this tool, you would just look up a KOL's name or do a search of particular KOLs in a particular specialty or region, and it will automatically show you what their tier is based on the tiering criteria we use. So that's one option. The other option would be to just do it manually through, you know, purchasing qualification data for KOLs from another source, and then manually tiering them based on the tiering criteria that you have. So Jennifer, you submitted that question. Just wanted to respond to that one, because it's related to what Mario is discussing right now and showing.
So that was a very kind of specific use case related to KOL identification and risk mitigation strategies and use of the data, as well as ways of enhancing, obviously, our commercial presence. We can move to the next case that we wanted to highlight, which is a little bit more macro level, right? So looking at how we can link fair market value data more at the aggregate level, so by specialty, as an example, versus and trends related to fair market value versus transparency reporting data. So what is that? What's the value in that? So I think there's a couple of things to note here. One is by looking at those two data sources and trends in the data, I think we can analyze and see, in some ways, how fair market value is actually used at the end of the day when contracting and engagement does happen. Oftentimes, fair market value is presented in a range, right? And companies may choose to go close to the maximum of the range for each tier, or they may not, right? And by looking at kind of trends in growth or increases or decreases in FMV by specialty on the upfront, and then looking at the same on the back end in terms of how that transpires into actual reporting data, will give us, I think, some insights as to how companies are operationalizing their fair market value. So in this case, we have a situation where based on the fair market value that we have, and we conduct fair market value analyses for dozens of companies in between 21 and 22, the FMV rates for, in the case of internal medicine, particularly in this case for payments for speaker programs, increased by 16%. Yet in the reporting data, that increase was only 9%. So what could that mean? So there's a couple of analytical scenarios that we can, or answers that we have here. So one is maybe companies are just not going to the maximum of the FMV rates. They may be operationally using slightly lower values, either on an hourly or an activity level. Or perhaps maybe there's changes in the way they're structuring their speaker programs, all other things being equal, that are driving perhaps the lower increase in the actual reported data versus the upfront kind of fair market value data. So there's a number of factors here, but I think that would allow us to, from a compliance perspective, understand how our FMV rates fit into the overall into the overall market. And I think that's a useful comparison to ensure that the fair market value rates that we have are accurate and appropriate, in addition to, of course, using objective third-party data in order to determine them, which from our perspective really is driven based on appropriate levels of compensation of the healthcare professionals that we're engaging with. Mark or Chris, anything to add on this case, or?
Nope. I think this one's pretty straightforward. It's a great way to validate FMV trend over time at your organization versus the rest of the industry. So,
thanks. So maybe we can move to question.
Yep. So real quick, I think we only need 3 for CP credit, but just as a quick fourth poll, and then we won't wait for the responses. We'll just go right to the next slide. Is your company currently leveraging HCP identification tools to engage with qualified, potentially untapped KOLs? Yes, no, I don't know. Okay, if you can answer, and while you answer, we're going to move on to our last case study, and then with 6 minutes left, hopefully we have time to answer 2 outstanding questions that are in our queue right now. So go ahead, Chris.
Yeah, so if we go to the next slide, actually, you can use the data to compare yourself against like companies. So, you can go into and use the data to, compare your company against another company and another company. Then you can look at different metrics. So like number of recipients, number of payments, average speaker bureaus. So this is a way to use the data for risk purposes. And we'll provide you with access to this tool after the webinar if you're interested. So sort of like Mario said, you can go in and look at like what doctors company A is engaging versus company B. We have a tool that'll do that for you, and we'll just provide access to that. And you can use this tool to compare your company against other companies. If you have a like company and they're only engaging, 100 doctors for food and beverage, and your company's engaging 1,000, that's interesting. Like, why is that? Why are you taking out so many more doctors than another company? So these are the kinds of things that you want to do, and you can use the data to do so. And we have tools that are available to you that'll help you do that. And if you go to the next slide, and this will just be the last slide real quickly, you can actually take the transparency data, add to it or enrich it with hospital data. I don't know if you can flip to the next slide. So you can actually look at payments to doctors affiliated with certain hospitals. So there's a lot of interesting things you can do with the data. And the commercial team might find this of interest, right? Hey, I'm looking to call on, the Mayo Clinic. I want to know what doctors my competitor is interacting with that are at the Mayo Clinic. So you can actually drill down into that. So we've blended together hospital data and the CMS data and put that together. So there's a lot of kind of interesting things that you can do from a comparison perspective. And we kind of have all of that available. And these are just some examples, and there's a lot of things you can do with the data once you have it all into a reporting platform.
Okay. Great. So we, I believe that's the last slide. So just want to address some of the outstanding questions in our queue right now. And Chris, I think this one is for you, but it is. Can you address some of the technical reporting challenges, such as UDI code reporting requirements for organizations with multiple business segments?
Yeah, so the UDI is the unique identifier for your device, and we can follow up with the person that asked the question to provide a little bit more detail. But from a UDI perspective, like every screw, as an example, could have a UDI associated with it. Now, you're not going to want to have like a million UDIs that you're trying to report. So you want to sort of aggregate as much as possible, like the UDI that you report. So what is like the platform or the system? Use that UDI, not every single part or screw of that. And then you can put in your assumptions document your approach. Like we're using the UDI for the system, not each individual component of the system. So this all gets back to like not overcomplicating it, but we can follow up with some more clarifying questions to the person that asked that specific question.
Great, we'll follow up with you. Another one is, do you have any insight on the CMS audits that are being conducted? Is there anything specific that triggered the audits? I mean, I can speak to the triggering. I think it's that CMS finally got enough resources to actually conduct the audits that they've been threatening to do for years. So I think that's one of the big drivers of why we're now starting to see some CMS audits. Mario and Chris, do you have any other insights into any of the CMS audits that we're now starting to see happening more often in the industry?
Yeah, I think it's going to be like what you would expect, like accurate data. So if you have to like delete and reattest multiple times, if you're late filings, and I also think if there's significant differences from year to year, like last year you had $1 million in consulting and this year you have 0, like that's going to be an outlier. So I think it's really a lot of the outliers that are going to drive the CMS audits, and it's also the accuracy of the data. Like if you're having to like reattest multiple times, like that's probably not a great sign to the government that year. No, it's going to happen, but it's probably not a great indicator that you're having to like submit it 10 times to get it correct. So I think those are some things that but we'll get more information as they do these audits in the next couple months.
Okay, good. And then Peggy mentioned you'd love access to this tool. Peggy will reach out to you separately to talk about the tool. But also, are we sending out a recording of this event? And yes, everyone who has registered and attended will receive a follow-up email with this recording. It usually takes a few days, so I would expect it within a week or so.
Yeah, I'm not aware of any time. I'm not aware of any changes into state reporting in the past year.
Yeah,
there changes.
Yeah, there was a question around, have there been any changes to or any changes to existing state or federal reporting requirements in the last year, or any new jurisdictions? And other than Italy coming onto the global mix of things, there has not been as many changes with existing jurisdictions going on, but we can follow up and get back to you if there's anything there. Okay. Well, we are out of time. I think we're not able to get to one or two questions, but we can follow up with you individually. We do appreciate everybody's time. I hope you found this to be helpful and informative. You have our contact information up on the screen now. If you'd like to reach out to any of us and ask any additional questions or learn more, that would be great. But thank you again for attending. It was our pleasure to present this information, and hope to see you again at another webinar soon. Thanks so much.